So hello and welcome back to Jacobit's Learning. Yesterday we analyzed some stocks. We're going to analyze what happened today, just a day later, just so you can see in real time how things happen. So this was yesterday. This was 9/14/2023 when our gains are in green and losses are in red. Okay, so we had this much in losses, yet we had a gain to offset it. But here's what is actually happening today. Let's move on. So this was yesterday, September 14th, and I drew these arrows to show that they go down. That what's happening here is today, as of September 15th, the market value actually went down. So it doesn't matter how much money you put in, it again is what is tied to the stocks. So you have less market value. So yesterday you had 5,621, and today you had 554, and they're telling you your total loss is $162.36. I'm just going to round this, and so you can see what's going on in real time. Oops, that's a 6, it's a bad 6, but it's 1, and this is your 1 place value here. So like your market value as a whole is only going down a couple of dollars. And I know like most people hate to see that. It's only gone down $66, not too bad. And that would make sense because your total gain here was, your total loss, was $77.18. And then you're backed against your gain of $69.25. So $7.93 really is your loss. So that's not so bad. Okay? It's not such a bad loss. So let's move on. Here's what happened with that stock I was telling you about yesterday, the entertainment stock. So yesterday it was $106.91 gain, today $92.73 gain, and see how they have here, they've done it for you, a $19.78 loss. And here's what's happened. Your total shares or total cost over here is $274.92 yesterday, and now you're just down a couple of dollars. Just a couple of dollars, not too bad. What we do here at Jacobit's is if we saw this 274 become a 254, then we'd show like bad things, and if we show it go down to 234, we'd be completely tired. But that's not what's happening. None of that is happening. Then we start looking at, okay, should we sell? Should we dump it? What should we do?
Dark out there. I'm not gonna stay around you long.
So here are your losses.
Huh? I didn't hear you.
Here are your losses.
I still didn't hear you.
And you have all this red. All this red. 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 Because the green are gains. And the reds in total are outweighing your losses, but not so badly that when you looked on that initial slide, you still have 5,544 and some change for this here .xx in a total value. So you didn't drop too much. It's just that the each stock you had. And keep in mind, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You have 14 different stocks. So there's bound to be some type of volatility. Okay? Bound to be, because see, these are your gains. These are your gains. This loss here, this negative $1.80, this negative 30 cents means that, they've been going down consistently. So we need to examine these. But since there's so little money you're losing, they won't be examined for like a week or two. And this still has a gain. So even though you lost $27.70 and it went up at 5 cents, hopefully if it keeps going up this 27, because it's negative, will go down to negative 24. And then from there we want to go to negative 22. And there, once it gets to like a certain threshold, negative 20, we're kind of losing. We're kind of winning, I'm sorry, because the stocks went up. So here we are. Okay, more red, less green. Here's the back end. This is the front end of the portfolio. Let's look at what's going on here. This is a mutual fund and not a stock, but remember, a mutual fund or pulls a fund tied to it. Mutual funds you have to look at differently because of how they work. This too, that's a mutual fund. So you look at it differently. Plus there's a gain here. So it's not too bad. I'm crossing it out because it's not really too much of a concern. Where you really have to look is over here. But even here you have a negative $6.72 loss, $16.69, $165.50. Remember we discussed this before. This is a mining stock, and we bought so many shares. So even that is a loss. But look at what they cost originally. They were barely like 4 cents. So the market value, what your total loss is $45. Are you going to really be concerned about $45 when you're comparing against your overall stock of 5,544? I mean, it's not such a big deal. It's a loss, but it's not going to like destroy you or destroy something with you. Here you go. You had 28-cent gain, negative $2.70. That's not so bad. 93-cent gain, $5.63. And here, you've only lost 58 cents. No big reason for concern. You gained here, and here's a $60.23 gain. Yay! So overall, it's not doing too badly. It's not doing as well as we want, though. So we don't want to get overconfident, but it's kind of like moving along. And again, you are playing the game of stock market volatility. And these stocks, by definition, are automatically volatile. So if you want to take your time, go back and pause and look at this. It's still not so bad. The market, by its nature, is automatically volatile. There is nothing guaranteed. And you could lose a shirt off your back, but this is how volatile. This is how the market works. We read this yesterday. Our information is accurate according to our portfolio, just this one. Okay, and we use a multitude of things to use our decisions. Basically, our common sense, and also what we do. We know how to choose stocks. A lot of us are beginners. Thanks for watching part 2.